Hello and welcome to this Friday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us a broker update. We also have Andrew Cox here with the DHL Supply Chain Pricing Power Index update. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Friday carrier update presented by PowerFleet. I'm Zach Strickland. So we've got the outbound tender volume index combined with the outbound tender rejection index on the chart behind me, and you can see that both of them continue to soar to new heights as we approach the July 4th for the July holiday here in the next week or so. So tender rejection rates up over 12%. Again, about in here was the last time we saw that. That was about the end of April or end of March, early April when we saw that tender rejection rate last time, and again around the middle part of March. So again, we are very tight right now in terms of seeing this market really turn around and see, you know, how tight is it going to go as we're approaching the holiday next week. Now, it should smooth out a little bit next week as we get closer to July the 4th. These volumes should start to level out a little bit more, but time will tell. We're in a new world order, as we've talked about in the past. Tender volume index up over 12,300. Pretty impressive as we see a lot of shippers starting to push a lot of freight off the dock right now. Tender lead times, I don't have that pulled up, but they are starting to go back up again. So that's an indication that we're starting to see some of that freight potentially start moving closer or beyond, you know, when it really needs to move right now. After the holiday, for instance, we might be seeing a little bit more of a planning for the near-term future in that regard. So that is an indication that we should start to see some of these volumes and tender rejections eventually here in the next 4 or 5 days start to kind of crest and move back down. We will see, because one day does not a trend make. Looking at the change, and this is another reason that this is, you know, we're thinking that this may not be a sustainable and a near-term spike in tender rejection rates. The rate of change in tender rejection is so high, tender rejection and tender volume so high right now, 476 basis points, so 4.76 percentage points higher this time, you know, this time last week than we were this time last week, I should say. And that's, you know, you can look back over the history of this. You really don't see a lot of that happening, except for you got to go, of course, all the way back to March. And then it doesn't even happen really in December or January, or when you traditionally see some of these holiday contractions in capacity. So that's not sustainable by any means. That rate of change is not sustainable, but it doesn't mean that it's over. It just means that we should probably see some deceleration there in the next couple of days or so. Tender volumes, same story, 8.63% higher versus this time last week. Super fast, quick rate of change. Looking back here, don't get too excited about this. That's just Memorial Day coming out of this trough for the 7-day moving average on the OTVI. So this happens every single holiday. You see these troughs. So when that does increase 8.63%, you can see the last time that it was increasing at that rate, we were in the midst of the panic buying scenario, and it did again drop off dramatically. So be careful watching for that. I don't know if we're going to see that level of drop off by any means, but we are setting up. The faster this thing goes up, the potential recoil is there as well. So we'll be keeping an eye on that. In the United States, where's capacity starting to tighten up? Pretty much everywhere in the eastern half of the country. We've had a ton of freight moving off the West Coast. You know, carriers have been flocking to this area of the country over here, servicing a lot of the Southern California freight. It has thrown networks out of balance significantly. Carriers are finally starting to reject a bunch of freight. Looking at the lighter green, those are strong increases in tender rejection rates. So pretty much anywhere just east of the Mississippi in the central corridors, basically your largest markets outside of Chicago in the Midwest, really showing the strongest tender rejection rate increases. So, you know, Atlanta, Georgia, Ontario, California, Harrisburg, Pennsylvania, Los Angeles, California, all the top markets in the United States showing increases in tender rejection rate, statistically significant ones at that. Looking at volumes real fast, we've got, you know, not the surging volumes that you see like with the tender rejection rate surge, but it's certainly still prevalent. You got El Paso down here. If you stay tuned to Luke Falasca, he'll probably mention something about that. Down here in Texas has been really strong in terms of volume increasing here over the last little bit. But again, the middle part of the country starting to really show a lot of volume increases. The strongest increases are in some of these markets. They're not the biggest markets, but you got Jackson, Mississippi, Austin, Texas, El Paso, Texas, like I mentioned before, significant Texas increases. And now that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning everyone. It's Luke Falasca bringing you another broker update, and happy Friday, especially as we're about to enter the final couple of days of June here, and then we'll go right into the 4th of July. A lot of crazy things happening in the freight market right now. But first, the first thing we're gonna look at here is look in blue. Blue volume levels continuing to rise, okay? We've seen this rise continue to happen more or less since late April. We've been on this massive surge. Now, we expect volumes to slow down a little bit, potentially right as we get to the 4th of July, maybe next week, towards the end of next week, they should slow down. And then we'll see what happens after that. We might start to slip a little bit just because these volume levels are quite high, more than likely not very sustainable. That purple line that you see there, that's that rejection rate, which is just really starting to increase now as volume levels remain at these elevated levels. Tender rejections continue to rise as carriers just have more options of freight to choose from. We're sitting at 12.25% right now, which is very high. This time last year, we were sitting just over 5.5%, so quite substantially higher than we were this time last year. So expect spot market rates to continue to increase. Next right here, we're gonna look at our weekly tender rejection volatility map. Markets in green are going up. Markets in white are relatively unchanged, and markets in red, which we don't have, would be going down. So basically, tender rejections are going up more or less across the board, with a couple of these, smaller markets here in the mountain regions, the Dakotas, even a little bit around Chicago, are remaining relatively flat. A lot of activity happening here in California, Seattle, a lot of these major markets. All of Texas is green right now, especially that border freight. We're going to talk a little bit more about Texas later on. Florida, very green, going all the way through the East Coast. I mean, there's so much green on the map. All these areas in green are seeing great statistical increases in tender rejections. That's really going to tighten up capacity. Brokers, you should be on the phone constantly trying to land new freight right now. Shippers are having a very hard time covering freight. Also, make sure you do ask for a premium from those shippers, because carriers will demand it when you're moving freight. So expect to pay a high rate, whether you think you should or shouldn't. Just expect to pay it. In a lot of these green markets, it's just going to continue to go up, at least for the near future. We'll see how long it does last. Now, let's jump right into El Paso here, which is just seeing a monster increase, the biggest increase that we've seen day over day right now. So it's the largest increase of all the markets today. Volume levels are in green, tender rejections are in blue. Notice, right at the beginning of June here, we were very low. Over the course of the past 3.5 weeks, we have gone from tender rejections sitting around 2% to surged all the way up to almost 30% today. Just day over day, we went from sitting around that 10% to now 28% mark, or at least over the last 2 or 3 days it was. Volume levels are in green. We want to keep an eye on that, because volume levels will drive a lot of these tender rejections. We saw a big volume push at the beginning of June. Once that's that green line there, when those volume levels increased, then tender rejections started to rise, then volume levels increased again, and tender rejections surged more as it ate up all that capacity. On this next chart here, we're going to look at Austin, Texas, another Texas market here, so we'll stick with the theme. In blue, tender rejections. Now, keep in mind, tender rejections aren't rising quite as high. They're sitting at about 13.25%, so above the national average. But Austin is a little bit of a larger market than El Paso, so you would expect those to not be quite as high. Again, also driven by volume levels, right? Beginning of June, we saw that orange line there. That's that volume. It popped a little bit, right? Ate up a little bit of capacity. Carriers caught on. The tender rejections rose. Then volume levels continued to rise, and tender rejections rose along with it. So if you're moving freight out of Texas, be sure to increase your spot market rates. There's a lot of opportunities. Best of luck. Have a fantastic weekend, and that'll do it for today's broker update.
Welcome to the DHL Supply Chain Pricing Power Index update. I'm here with Andrew Cox. Andrew, what's the latest?
Anthony, we had a big swing this week. Both of the boys before me had talked about it. We're now what we believe to be as close to a balanced market as we have been in the recent times that we've been doing this. I do want to say that about 3 months ago, you asked me what my 3-month outlook was. I did say that we had a balanced market. That was, kind of a far outlook, but we're there. I don't know how long it'll last. Things are changing very quickly right now. The first thing we'll talk about is just volumes. I do want to say that some of this is seasonal. I do think that they're shippers trying to force out as much freight, get the inventory off the floor, try to make Q2 a little bit rosier than it is. I mean, they had an entire lost month here in the first month of the quarter, so they're trying to do their best. That's why some of this freight volume, I don't think will continue at this 12,000 level. It's not really sustainable, but I do have some data here in a little bit. We'll talk about consumer data that I do think there is the position. I think there's going to be an opportunity there to keep volumes remaining elevated above that 10,000 mark for through July, which is not what we normally see. July 4th usually marks a time of slow period. Things contract there for the first month of the third quarter. But I don't know if we're going to see that this year.
Right, and Andrew, this might be another shot in the dark, but when we're seeing this complete rise here, a lot of it's seasonality right now. Do you think this potential rise might throw off some trends that we historically see later on in the year?
It's quite possible. I mean, 2020 is not it's followed no historical precedent by any means. I mean, one thing I do want to talk about is capacity. So right here I have the outbound tender volume index in blue and the outbound tender rejection index in purple. You can see this first rise that we had back in March. It was for many different reasons. It was a different economic factors at play there. The entire country was being shut down. That's not the case right now. That may be the case in a couple weeks if COVID continues to ravage through communities. But see how quickly capacity reacted to the surge in volumes. Within days, these carriers started rejecting freight. That has taken a long time here. In this time, we're now just in the last week we've seen tender rejections jump up. That could be also having a little bit of a holiday impact. It could be seasonality changing that. But in any case, the capacity has tightened a lot this past week. That's why we see that things are now close to a balanced market. But that consumer data that I was talking about that we have been watching over the last couple of weeks, the big one to point out here and why I think that this trend could continue, this elevated volumes. If you look at total retail spending, excluding automobiles, plus 11% year over year for the past 5 days of the data. That is remarkable, truly, in my mind. Some of that is being propped up by that government spending, but in any case, they're outspending their money.
Right, and right now, one of the latest data sets we saw was consumer spending, and the latest consumer spending data shows that consumers were indeed more active in this most recent month. You just mentioned this is being propped up. Do you think this is sustainable and that some of this is going to subside as some of these unemployment benefits start to kind of fade away as we get through July?
That is my fear, yeah. And I do think that it is being propped up, so I have to believe that some of this will fall off. There is a lot of talk now about extending that benefit now that COVID has kind of revamped up and had the second outbreak. I'm in favor of them doing so, at least for a couple more months, to try to smoothen out this effect of it. I do think this is going to fall down, but I mean, there are some categories here that are just remarkable that I think will continue. I mean, online electronics, again, bumped up to 150% year over year. There's just people spending a lot of money. Another thing that is a little bit worrying is the grocery spending has picked up a bit. That tells me that there is a little bit of hoarding going on. People are probably buying more than they need. That could also have an influence on the outbound tender volume index picking up so much. So in any case, it's good to see a balanced market. Carriers are now in a better position than they've been probably all year since that. Besides that little freight frenzy we had in March. But things are looking better. We'll see what happens after the 4th.
Excellent. Andrew, thank you so much for that update. We appreciate it. And thank you so much for tuning in for this DHL Supply Chain Pricing Power Index update. We'll keep you updated on all the latest next week. Stay tuned. And that's going to do it for this Friday edition of FreightWaves Now. Thank you so much for checking us out. The content doesn't stop here. We're always streaming around the clock. So check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.